Good evening, everyone. My name is TK Kugler. I am the founder and managing partner of Wasabi Venture Stallions. And thank you all for coming to Fund 6. I just realized I have a typo that it's the 2026 fund. This is actually 2025, so I was fast forwarding a year. But it is Fund 5 and 2025 fund that we're doing this kickoff of tonight. And also on the call with me is George Adams, and you'll hear about George and hear from George in a little bit. So, but we are the two Wasabi Ventures Stallions folks on the call. Just a legal disclaimer, and this is I use this slide one because I have to legally do that. But it is important to understand that what we are talking about tonight is an investment vehicle. This is we're regulated by the SEC. It is meant to drive returns for those that participate. We make it fun and educational along the way, but the real primary focus is we are running an investment vehicle. And for those of you who have heard me talk about horse racing, I often talk about horse racing not being an investment. When you get to the breeding side, this is an investment, and we'll talk in more detail about that. But the disclaimer, your standard financial disclaimer, we're going to talk about forward-facing projections. We're going to talk about past results. All of those things come with all of the risks that those things always talk about. So, once again, I'm TK Kugler. Just a little bit about me. I have spent most of my life, all of my adult life, in the startup world, is on either one side of the table or another, either as a founder or an investor as a venture capitalist. And I've done that my whole life. And I brought some of that thinking and structure to Wasabi Venture Stallions. George Adams, who I've also mentioned, he acts as sort of the director. He is the brains behind the whole operation, is what I would say. And George acts as sort of director of stallions and breeding, and in many ways is the guiding force for the portfolio, and makes almost universally, collectively, we make the final decisions if we add an asset or not. But it's really George's brain power in almost all cases of what we add. So it's always exciting to have George on the team, and I'm lucky to call him both a friend and a partner. So what is it that we're talking about tonight? This is a venture capital style alternative investment fund where all of the assets are thoroughbred breeding assets. And once again, we only participate on the breeding side of the thoroughbred industry, the thoroughbred racing industry. We don't buy racehorses unless it is for breeding purposes. We don't generally in any form buy young horses that are years away from becoming breeding assets. We're strictly buying assets, and we'll talk about the assets specifically, but it is the breeding side of the business. And we do that because we have found, and we're going to demonstrate to you, that there is a place to make real returns in that world. So why should you invest in alternative assets? This is a really interesting quote from BlackRock. The great thing about alternative assets, and there are a lot of different alternative assets out there. Gold could be an alternative asset. Buying collectible cars is an alternative asset. Farmland is an alternative asset. Basically, when you hear the term alternative asset, you're talking about something that is not in the public markets. Real estate, commercial real estate would be an alternative asset. But thoroughbred breeding assets are also an alternative asset. And the great is that they tend to have a long life cycle, and they flatten out most portfolios, and that's the beauty of it. That it adds that balance when the public markets happen to go down. Often alternative assets are going in the opposite direction. So what are thoroughbred breeding assets? Shares of stallions, lifetime breeding rights in stallions, full ownership of a stallion, and then broodmare ownership. Those are the only four classes of assets that we put into our portfolio, okay, in our fund. They're made up of those four things. So what is a share of a stallion? Most of the time, and once again, I'm going to come under the assumption that you at least have some understanding of thoroughbred breeding, but there are stallions and there are broodmares, male and female. And a stallion will breed to could be multiple hundreds of broodmares in a year. But a broodmare only carries one foal every 11 months, basically one a year. So, and a share of a stallion is very much like a share of a company. Most stallions, when they are syndicated into 40 slices, 40 shares. And when you buy a share of that stallion, you're basically buying 2.5% of that stallion, just like you would be buying a stock or a company in itself. And that's the way stallion shares work. Very, very similar to buying ownership. They come with a special benefit, and we'll talk about this as we talk about cash flow. Both stallion shares and number two, lifetime breeding rights come with the right to breed a broodmare or sell the right to breed a broodmare every single year to that stallion. Unlike a company, where you just own shares of a company, you in a breeding right or a stallion share, you actually get this right, and you can sell that every single year or use that and generate revenues off of it. So, lifetime breeding rights are very similar to shares, where you get that breeding component every year. You get the right to breed. Sometimes it's one, sometimes it's two. It can even be more than that, depending on the situation, but usually it's one or two broodmares a year. But the lifetime breeding right does not come with ownership in the stallion. You actually own none of the stallion. You basically have the right to breed to that stallion, but you don't own the underlying asset. Full ownership of a stallion is just the way it's described. You buy the entire stallion and you can actually syndicate it back out yourself if you wanted to. And then there's broodmare ownership, which is owning the female side, as I mentioned. Those are the only four assets that we're talking about, or four classes of assets. The primary Fund 6 will be primarily numbers 1 and 4. I can tell you that. Can't say that we won't have a number 3, we won't have a number 2, but my guess is that Fund 6 that we're becoming a part of, that you all have an opportunity to think about becoming a part of, will primarily be made up of class number 1 and number 4 here, and we'll talk more about that. We talked a little bit about this already, how these assets earn money. Stallion shares. Sorry. I have to let somebody in. Stallion shares, it's like owning a part of a company. You can get an annual dividend from the shared pool. When all of the number of times a stallion covers broodmares that year, each time that they cover a broodmare, that's a fee, and that fee goes into the pool, and then that gets split up against all the people who own a share. So we'll just make up a number. If there's $1 million in fees collected in a year, and you own 1/40 of, you're going to get that $25,000. That's the kind of the way to think about that. Okay. Sales of the season, which I talked about, and obviously you can sell. It's like owning a company. You can sell that whole share of a stallion at some point, or maybe the whole stallion gets sold and you get your piece of that, just as if a company gets sold. Lifetime breeding rights, we talked about that. Sales of seasons, and the exit, you can sell an entire breeding right. When we talk about some of our old funds, or past funds, we're going to talk about how we've sold breeding rights already. Broodmare ownership. The way broodmares make money is you sell the individual foals underneath. You breed it, you raise it, you sell that foal off at the end of a, as a weanling, a yearling, or a 2-year-old, or at some point, once it reaches a certain age, you sell that, and then you get those proceeds from selling it, because when you own the broodmare, you also own the foal. You can sell a partial sale of a broodmare, almost like you syndicate it out. We do some of that at times. So you can see that, or you can sell the whole broodmare. We're going to talk in Fund 5. I think it was Fund 5. We sold a broodmare just last year. We're going to talk a little bit about how that worked. So that's how these assets, the four asset classes we talked about, that's how they all make money. So when in a fund do those four assets generally make money? So this is kind of the way to look at this chart and interpret this chart is that the brighter the orange, the more likelihood of larger returns. So the brighter the orange in that particular year of a fund, that's when it has its most chance of earning money. So if you look at a 10-year horizon for a fund, annual dividends of shares, as you can see, nothing happens in kind of year one except for down in the broodmare area. And the reason being that is that most share stallions are what are sold as live foal stands and nurse, meaning you cover a broodmare, you sell that season, the next year that broodmare gives birth, and at that point the fee is owned as long as that foal is alive and comes and stands up and nurses. That fee is then owed to the stallion owner. So obviously, if it takes a whole year of a gestation period for a broodmare, you're not making any money on those stallion seasons that first year. But you'll notice that it gets a bright orange in year 2. That's because first-year stallions tend to be at their peak that first year, right? The early year peak. Then years sort of 2 and 3 and the offspring that come with them, the price usually tends to go down as we're waiting. So if you think about the racing game here, year 5 is when those original foals here in year 2 start to sell. If those foals do very well at the track, then all of a sudden that stallion becomes worth more again. So their seasons go up. That's why the color's orange there. Obviously, you can liquidate an asset at any point, any of these. It's a private market. It's not a public market, but you can liquidate those at almost any point. But the best chance is in those later years. That's why I put a brighter color. And once again, broodmares in their early years, they're producing a foal that you can sell every year. So that's why I see that as the early part. It's just an illustration to kind of show you how money flows, generally speaking, or mentally how I think about the funds flowing in a fund. All of this creates what's known as a J curve. J curve, we have a whole webinar on J curves if you want to look it up and you can learn about it. But all private equity is based on a J curve. And what if you think about this graphic, it kind of it's why it's called a J curve is it looks just like this. And because in the early years you're investing, that's when you're making your investments, that's when you're buying the assets. And if you remember from the color chart, those early years are lean as far as getting returns. You're hoping that the assets hit and then the returns go sharpen up. What's beautiful about this product, and we'll talk this asset class, is that it has some distinct advantages so that this J is not too steep. It's pretty shallow. And at the same time, it starts giving you returns fairly early. There are plenty of alternative assets where the J curve is very steep and then you're hoping it goes straight up. We try to build a shallow J curve, meaning we're getting returns to you quickly because of the nature of the asset class. But we're still leaving open the optionality that if one of the asset hits, we get many multiples of returns. So that's why this J, we want a shallow J, but one that can go straight up if the assets hit. And once again, I can if you visit our Slack channel or you visit our YouTube channel, we have a whole series talking about the J curve and how we think about it and how it's structured. So, what is the fund structure? Once again, this is Fund 6 that we're talking about. We've had Funds 1 through 5 before this. We are a Delaware Series LLC fund. You will get a K1. As a matter of fact, for some of you who are existing investors, the accounting team has finished, and our tax team has finished Funds 1 through 4. Your K1s will be in by the morning. So you'll be able to go in the portal and grab your K1s in the morning. So it is an annual fund. So meaning Fund 6 is completely separate from Fund 5. It has its own assets. Even though it's in the same series, it's its own distinct portfolio. What happens in Fund 5 does not affect what happens in Fund 6 and vice versa. It's a 10-year 2 and 20 fund. I showed you the graphic before about how we think about returns over that 10-year. It is a 10-year fund, 2 and 20, meaning it's 2% fees per year with a 20% carry. What that means is that we, over the 10-year fund, we're charging 10%, 20% of fees. We have no other fees to you for administering the fund. I don't charge you for tax prep. I don't, if you're a participant, you're not getting separately charged for tax prep or legal work or compliance work. That's all rolled into the fee. Basically, that 2% a year comes out of, if you put in the money, it comes out of that investment. You don't pay the fees on top in any way. The 20% carry, what carried interest is that how I hope to make money out of this, and George, so I can pay George for his brilliance, is that if once we have generated 100% return to you, you put in $5,000, you've gotten all $5,000 back. The minute we start earning a dollar past that, we get 20% of your profits once that happens. That's the only way we earn returns here. Okay. We are only marketed and available to US-based accredited and qualified investors. If you are not accredited, and we can talk about what that means, but if you're not accredited or a qualified investor, then we can't accept you. That's the SEC rules that we're under today. You have to be US based too. If you're a foreign, if you live in a foreign country, we can't accept investment from you today. Once again, that's the laws. I can't change them. It is a $5,000 minimum investment for the first 30 days of our fundraising period. After that, the minimum moves to $10,000. Same as for those that participated last year. That's exactly like what we did last year. Same exact thing. The only difference is you also have to fund the $5,000 in that first 30 days. Now, you can fund 5,000 and let's say 5 months from now, if the fund is still hasn't been filled, you can add to it. We had people last year who invested early and said, boy, I love how this is going. I want to add more money to it. You can do that. We won't take more than $500,000 from any one individual. So our target is between a $1 and $2.5 million fund. I am very certain we're going to hit the minimum without much trouble. And we will be fundraising through the end of October. So we're starting, it literally kicks off tomorrow. We will fundraise between now and October 31st or until we hit 2.5 million. If we hit 2.5 million for this fund, we will close it. So just get in early is what I would tell you. So some history about Wasabi Venture Stallions. We purchased our first individual stallion. It was a full stallion in September 2019. So just a little over, well, not quite 5 years ago. George called me very excited about he had found a deal on Force the Pass. I know exactly where I was standing when he called me and everything. So anyway, we called, we bought Force the Pass. We bought 100% of him. We bought 100% of him. We stood him 1 year to the day, literally to the day, we sold him for $500,000. And you can do your own return there and figure out what we got on returns. from that. And by the way, that force to pass is still earning returns for those original investors who bought into that individual stallion. We took that success that we learned there, which was a great success, and said, hey, here's this concept. This is where my venture capital background came in, and said, we could build a fund every single year and put a portfolio of assets together for people that are stallion assets and breeding assets all into a fund. So we launched our first fund in 2020, and have done one every subsequent year since then. Our first fund, Fund One, paid its first distribution in June of 2022. If you remember that heat map, that makes sense. We Fund One, Two, and Three paid out in 2023 distributions. The same thing happened in 2024 with Fund Four, and we are expecting Fund One through Five to all pay distributions in June of 2025. So, and we'll talk about some of the actual results there. But basically, we pay distributions twice a year, depending on how the fund has done, the assets are doing, either in Q1 and then usually June as well. Why in June? The reason being is that stallions, once again, if you know anything about the thoroughbred breeding world, they're trying to have babies as close to January 1 as possible. So most of that breeding happens in the first part of the year. So most of the revenue that's generated happens in that first part of the year. So by June, the stallion farms have collected the money and have paid out to us. And we've collected the money when we've sold the shares, or the season. So that's why June is when we usually pay out the distribution to funds. DPI, for those of you who have invested in private equity before, or private asset classes before, you've probably heard the DPI. It's distributions paid in dollars, meaning think of it as the returns every single year that a fund is returning to you. It's distributions on the money that you put in. You put in $1, how much of that dollar have I gotten back? Standard return situation. Once again, that J curve, we try to keep it shallow, but it does impact that first 18 to 30 months, how much return you can get. Why? Because you're waiting for those foals to be born. You're waiting for those foals to be sold. You're waiting for the stallions to start having their book of business, produce revenues. So, but years 1, 2, and 3 still can be significant, and we'll look at some actual numbers. But in theory, the best numbers should be years 6 through 10. I know this question will come up. What happens, TK, if you get to year 10 and you still own assets? Well, there are, in the PPM, we can continue past year 10. We just don't charge any fees. That's why it's a 10-year fund. We would just keep the fund open if it makes sense, or we would sell the assets at that point. But generally speaking, it's called a 10-year fund because that's when the fees stop. That's all. Once again, distributions happen once or twice a year. But DPI is probably, in our mind, for the fund and the way we structure it, it's the single most important metric that you should think about, okay? We want to get distributions back into the hands of investors. That's why it's a shallow J curve. That's why we shoot for this, okay? So what have been the returns to this point of Fund 1, 2, and 3? Candidly, pretty darn good. You never want to give too much anecdotal or just illustrative words being used, but the average DPI that we have seen so far per year on Fund One is 22%. That means we have returned 22% for the first 3 years. Once again, we're just getting to year 4. June will be kind of year 4 of Fund One's chance to return, because years 0 through 1, you're doing all the investing, right? So there's no chance to get a return if you're just doing the investing. So that's why we're looking at years 1, 2, and 3 for funds 1, 2, and 3. So Fund One has had 3 years of possible distributions. With this year, Fund Two is two, Fund Three has had one. So those are the returns as of today for those three funds. And we'll talk about the individual assets as George is going to jump in, and we'll talk about how they've done and where those returns have come from. But from a DPI standpoint, if you're familiar with private equity or alternative assets, this is a pretty darn good story. Candidly, we feel very proud of what we've been able to accomplish here the last few years. This is one that is very unique to individual assets. So, and I'm going to try to explain it without giving any tax advice. Thoroughbred breeding assets come with a natural depreciation. They actually have a separate section in the tax code, the US tax code, that allows for depreciation specifically of thoroughbred horses. And we take that depreciation and we pass that on to the investors. What this does is gives you a way to realize depreciation on the dollars that you put in starting year one. It's a pretty unique and very positive benefit. I will tell you that in private conversations, at least 1/3 of our investors invest solely for the tax benefits that they get for investing with us. So once again, I can't give you tax advice, but I can show you what the numbers are. Fund One has already realized 23.8, almost 23.8% depreciation. That means from a dollar standpoint and a tax standpoint, if you put in, $10,000, you've realized almost 24% as a Fund One investor in depreciation write-off on your taxes. That's what that means. If you'll notice, Fund Three is up to almost 37%. Now you might say, TK, why is Fund One and Fund Two have lower depreciation numbers? Because Fund One and Fund Two have a lot more breeding rights. Breeding rights, you don't own an asset, so there's nothing to depreciate. I will tell you, there's very little, I don't want to say zero chance, but there's the industry has moved away from breeding rights, and we have moved away from buying breeding rights. So the depreciation in funds 4 and 5 and 6 will look much more like Fund 3 does than Fund 1 or 2. But if you want to dig in and understand depreciation and why it's important to you, it's probably the most unique feature to our fund. And like I said, I would say solid 1/3 of our existing investors came on board to get just that benefit. So now let's dig in and talk specifically about Fund One. I'll cover some of the stuff at the top. We've already talked a lot about those returns. You can see when those returns happen. If you remember sort of the color scheme, once again, of that 10-year chart, notice how we're in that sort of Fund Three and the distribution's down because the stallion, this is where we're the scoop up of the J curve here. But even though we've been able to keep it very shallow, because actually a little over it, of 2/3 of the money has already been returned to investors, and we're really only entering year 4 of when returns could happen of a 10-year fund. So it's really quite exciting. George, if you want to talk a little bit about some of the specific assets that are in Fund One, and that would be great.
Yeah, so you can see the list down there. We had predominantly breeding rights for Fund One, which again entitled us to breed one mare a year to those stallions for their entire breeding careers. The exceptions being Gift Box, who now has his first 3-year-olds running, who stands at Lane's End. He was a winner of the Santa Anita Handicap. He's got 16 winners as of a week or so ago, including a BTW as a black type winner, a stakes winner. We have a share in Honest Mischief, who is the hottest young stallion in New York. He was the leading first crop sire of 2024 outside of Kentucky with 7 black type horses. He had a pair of undefeated 2-year-old multiple stakes winners who, on 2 separate weekends, the Colt and the filly both won stakes races for New York breds. The second pair of those was $500,000 each. So as share owners in the New York market, they pay stallion bonuses to the stallion owner. So for those winners' shares of the $500,000 purses, Honest Mischief's owners received stallion bonuses, and we got our 2.5% of those bonuses. We also had a share in Painter, who unfortunately passed away last year, the year before, after we'd bred a couple of mares to him on our share. We also have a breeding right in Thousand Words, who was the number 6 first crop sire last year. Stands at Spendthrift Farm. He's got a filly in Florida named the Queen's MG, who's a graded stakes winner. And another filly named Vodka with a Twist, who was 3rd in the Breeders' Cup and is going to make her 3-year-old debut in the Grade 1 Santa Anita Oaks shortly. So that breeding right and the Honest Mischief share are looking right now like they could be some pretty solid assets for us on a going forward basis.
Yeah. And for people who are investors in Fund One, because there's some of you on the call, one of the things, and you've heard me talk about this, these assets appreciate. We're getting to that appreciation point. That Honest Mischief share, we could easily sell today, probably for 2 to maybe even 3x what we paid for it. It's possibly in that ballpark. Now we're not looking to sell it. We think there's more upside here, but that's how these assets work. They appreciate over time. Now we don't change their book value because it's a private market, and we don't do that. And I did a whole webinar on why that doesn't happen, but these assets still exist. So we've returned 2/3 of the money already to investors via distributions, yet we still own the underlying assets, which are appreciating. And that's the key message here. Let's talk about Fund 2, which was 2021. Also has doing extremely well from a perspective of it's also getting very close to returning 2/3, and it was able to do that in the first 2 years of its existence. It had some underlying really good things turn out, and George is going to tell about that. Also, you'll notice that we were able to sell some of those breeding rights. We sold 2 of them at different points and actually got returns from those already, and those pumped up the distributions as well. George, why don't you jump in a little bit and talk about the assets that are in Fund 2?
Yep. So the majority of these are shares and lifetime breeding rights in a bunch of young stallions who are all going to have their first 2-year-olds running later this year. I think all but the dialed in lifetime breeding right, every other stallion still on that list is going to have his first 2-year-olds run this year. Dialed in is a proven stallion. We got a lifetime breeding right in him on the private market. He continues to do very well. The Golden Sense lifetime breeding right we sold after we had made money on it. And then Tapiture, actually, they sold him to Canada, but we got a distribution for our lifetime breeding right when they did that sale. Of the others, as I said, they're going to have their first 2-year-olds run this year. Basin, Independence Hall, Modernist, Raging Bull, Rock Your World, and Tacitus. I think every one of those had a 6-figure 2-year-old sell at OBS last week, except no, I think they all did actually.
Yep.
Independence Hall had $1 million 2-year-old sell in that sale. Basin had one for like 270. Raging Bull had one for 200. In addition to the yearling sale prices that are listed there. And the Tacituses have been bought by some really serious people. Winchell and Juddmont is still in on Tacitus. So bunch of really exciting young stallions that are hopefully one or more of them will hit this year, and we'll be in good shape going forward.
Yes, sir. Fund three has once again, and it's just has really had to this point just 1 year of true distribution opportunities. Um, you'll notice we've returned about 21.6% of the original investment already. The one thing to take away when you start to look at this, Fund three is the first fund where we have broodmares as well. The first two funds were purely stallion assets. Fund three, we started adding broodmares. Multiple reasons for that. The one reason is Fund three, four, and five are much larger funds, so we thought it was time that we could do that. And two, by having broodmare assets, it changes the slope of the J curve because it gives a better chance to start earning money early in a broodmare. I mean, in a fund's life. And three, the better your broodmare band is as a fund, the better access to better stallion assets that we get. Like all alternative assets in the whole world, the trick is access. It's not, these are not, you have to, it's like a private club. You do not get access to stallion assets unless you are in the club. And if you don't have great broodmares, you don't get to be in the club. And that's a very reason why we have these assets mixed in. Those three reasons. George, if you want to talk a little bit about the stallions and the broodmares here.
Yep, and you'll see this set of assets, the stallion assets, for the first time now we have more shares than breeding rights in this one, and that goes along with the access that TK was talking about. Some of the earlier funds we had tried to get shares and weren't sort of established enough to get a share, so we had to take a breeding right, or there just wasn't a share for us, even though we sort of called and asked on some stallions. And so this fund three, we finally started getting access to some of these more interesting horses with the broodmare band, and having gotten in on some earlier horses and missed out on some that we liked. But Aloha West has his first yearlings this year. He's the winner of the Breeders' Cup Sprint. Stands at Millridge, who's doing a great job with Oscar Performance. Greatest Honor was a breeding right, the only sort of new breeding right we picked up there. He's a really interesting son of Tappet, who's at Spendthrift. Won a couple of Derby preps at Gulfstream from off the pace, which he shouldn't have done given his running style. Highly motivated and into mischief son who set 2 new track records. Very well bred. He's had 2 sisters win grade 1s since we bought that share. Nashville, wickedly fast sprinter. That was the most expensive share we had purchased to that point. They sold very well. He was booked full his first and his second year, which doesn't typically happen in a horse's second year, especially most of the Kentucky farms, which turn away very few mares. And we had a share in Tapiture in this one, which again he got sold to Canada. I think we were the only ones that voted against that sale because we were still using him and generating revenue from him. But we did get paid for our share out of that sale. And then the brood mares, bunch of young mares we bought either as broodmare prospects, which means they've never been mated or in foal. American Thriller is an American Pharaoh mare. She had a sister break her maiden impressively in Ireland for Joseph O'Brien last year for the Coolmore Partners. Floral Hall we bought in full for $25,000 and sold that foal that she was carrying for $45,000. Gunslinging, we purchased her when her brother Disarm had only broken his maiden. He was on the Derby Trail, and we had some offers to buy her, which we eventually decided not to, and ride it out. Her first foal sold in January of this year for $135, which was about twice what we paid for her. So that was a nice return. Mad Grace raced for Wasabi. Nice pedigree, hard knocking mare. She's got 2 foals, 1 foal on the ground, and she's pregnant to Oscar Performance due next month, I believe. And his stud fee has risen from 25 to 45, so that'll be a nice foal for us. Paw Prince, a very active Juddmonte family. There's a horse named Final Gambit in the Jim Beam, or what do they call it now? The Jeff Ruby at Turfway this weekend. Final Gambit is out of a sister to Paw Prince, so we want to root for him in that race along with California Burrito, because we have a share in Army Mule in a later fund. We also have, there's two other mares in there. Why Not Tonight, which was Wasabi's first stakes winner. We retired her, kept her in the broodmare band. Her first foal is a Nashville that we're going to keep to race. And she is just delivered a very nice McLean's Music foal, her second foal. So those are all assets of this fun bunch of young mares with really nice pedigrees that have had some decent sales to start off here.
Yeah. And if you'll notice the returns a little bit, I come back to that J curve because George started talking about all those successes that we had on selling some of those foals. That is very impactful on why that DPI is looking so good early for like a fund 3. Fund 4 is going to be a really great fund to talk about. Because in my opinion, it has every chance to be truly magical as we dig into the assets here. For those of you who are investors, you know this already. We talked a lot about it on the private Slack channel. Um, you also notice that there's quite a few broodmares in there with just 3 stallion assets. Sometimes that's just the way it shook out in past years because there were not as many assets available. And when you hear about the stallion assets that we got, we sort of went with a couple really big chunks there. And a couple of those are really expensive assets and are paying the dividends and why we took those bets. But it's already had even sort of in fund 4 is sort of in that very first part. It still had a 6% distribution last year. So even in as it was entering sort of year 1, like once again, year 0 and year 1 are mostly about investing. It still was able to do a small distribution, expecting a bigger distribution in June of 2025. So, George, if you want to talk about the assets a little bit, because I've already pre-sold how great the assets are.
Yeah, so only 3 Stallion shares in this one. Again, all shares, and much higher end. Again, we just finally had access, and it was actually a very shallow crop for Stallion assets. Also, between horses going to certain farms that just don't syndicate, and only a handful of exciting prospects anyway. But we got a share in McLean's Music, who's a proven horse. He's got a horse named River Thames in Florida, was second in the Fountain of Youth, who run back in the Florida Derby. So he's in the Derby Trail. McLean's Music's already proven. Sire of Jackie's Warrior, Cloud Computing won the Preakness out of his first crop. During the Clock is a young son of his with foals on the ground that have sold shockingly well. So he's a nice proven horse that they sell well and run well. Up to the mark, we bought that share late summer, early fall while he was still running. So he wasn't the champion turf horse yet. And the deal had kickers, and luckily we ended up not having to pay any kickers because he, of the races that he won, they weren't on the list. And then in the Breeders' Cup, he missed by just a half length there in the turf and sort of got even more plaudits, I think, than if he had won, but there was no kicker for that. So we got all the credit. He was the Eclipse champion, and no kicker. He's at Lane's End, which is one of the prestigious farms in Kentucky. Was booked full with his first crop. We were actually able to sell one of our seasons for above market price. So again, a really exciting horse by a horse not this time, who's one of the hottest young stallions out there. And then the third asset there is a share in Locked, who is still running. We bought that before the Breeders' Cup, his 2-year-old year, which is not public information. But obviously that's looking even better now after he just won the San Anita Handicap a week or two ago by the biggest margin in the history of the race. He's going to go to Gainesway next year. And the way things stand right now, he looks likely to be the Eclipse champion older horse, if not horse of the year, which would be pretty nice to have had access to him before he accomplished all of that. Then of the brood mares, a handful of very well-bred brood mares in there, from Coolmore and Godolphin families, Juddmonte families. Again, mostly young mares with that hadn't had foals yet, or only a couple of foals. Um, Waiting on updates from those families, and they've already had, um, yeah, they've had some foals sell. We'll keep and race a couple of those. And then frame of mind, the one mare we did sell. We bought for 15,000, I think, sold for 16,000, and sold her foal for 20,000. So we did okay on that deal. Yeah, some pretty interesting mares in there again that have foals that'll sell and then make us money uh, when those sell and down the road when they hopefully run well.
One interesting thing is that you'll see in the frame of mind that's a broodmare. We actually sold the broodmare as well. So we sold the broodmare and the first foal at the sort of side by side in back to back hips. So that's once again flattening the J curve because it was a very quick turnaround on that. Fund five is last year's fund. So we're just finishing up heading into year one of that. We were in year zero last year. So what you'll notice here, very heavy on the stallions, little lighter on the brood mares. When we talk about fund six, you're going to see that again. It's going to be heavy on the stallions and light on the brood mares because we had the broodmare band to sort of in earlier funds that gets us access. Um, so expecting the first distribution in June of 2025 here. George, if you want to talk about the assets real quick.
Yeah, again, all shares this time, mostly new stallions, either new last year or new this year, depending on the horse. With the fundraising happened. A couple of those retired late last year, like Annapolis retired in early 2024, so he was in this fund because Fund Four had closed. Annapolis, really exciting Grade One winner at Claiborne, which is a farm that we try and get in on as many things as we can there. They brought Annapolis in last year, and then Prince of Monaco this year, who's down at the bottom there. He's already booked full. He's one of the really popular first year stallions that should we've got. I think we're breeding 5 mares to him. Obviously, not all on that share, but we think he's going to be a super commercial horse, which will make him popular for these first 4 years before they reach the racetrack, and we'll make our money back on him right off the bat, and hopefully then he hits and we keep collecting for a long time. Army Mule, we chased a share in Army Mule for years. We had deals on 2 before we got this one, and the syndicate, the pre-existing syndicate, all syndicates come with a right of first refusal on the sale of any share. So we had 2 deals in place, and pre-existing syndicate members exercised the right of first refusal on our shares the first 2 times. So we finally got an Army Mule here. He is poised to heat up with his 2-year-olds of this year and next year. They were conceived on higher fees after he'd had some success, and he's done. His percentages are through the roof. And this is where California Burrito, who also runs in the Jeff Ruby this weekend, we're rooting for a dead heat. A dead heat there to benefit both of the funds that have rooting interest there. Blofeld's the best stallion in Maryland. Because he's in a regional market, we get stallion awards. It's not just about stud fees there. So his offspring will earn us stallion awards for years and years and years. Casa Creed, Charge It, Dr. Shovel, more young stallions. Charge It actually has ended up being one of the sort of most popular stallions in Kentucky this year, first year stallions. We were lucky to get in on him. Shares have subsequently traded for more than twice what we paid for that on the private market, like a month afterwards, because I think people sort of looked around at the rest of the incoming stallion crop for this year, and were not jazzed, and decided that he's one of the ones. So pretty excited to have a couple of mares headed his way on that share, which is already sort of doubled in value, book value wise. Again, we weren't actually tempted to sell that because it just means we're going to make our money back faster, given how much the market likes him. But again, hopefully he hits and keeps paying us back long term. Um, and then broodmares, again, we've been going with younger broodmares, broodmare prospects from active families. Aquatic Approach has a sister, Mission of Joy, who is a graded stakes filly since she was before we bought Aquatic Approach, but has continued to do that since then. Then two more of Aquatic Approach's siblings have won since we purchased her. Giving Spirit, her aunt was a new stakes. We're running and gunning is her name. She won the Sunland Oaks a couple weeks ago, and then Giving Spirit's half brother Maycox Bay finished third in the Louisiana handicap a month or so ago. He's entered in both the New Orleans handicap and the Essex handicap this weekend. I hope he runs in the Essex because it looks like an easier spot, and be a really nice update if we get a graded win out of Giving Spirit's brother. Queen Anne just had a gorgeous first foal. Her siblings and herself also the yearlings for six figures. It's a big Claiborne family. Um, Queen Mum comes from a great page. We got her for excellent value because she happened to be empty at the time. Just had a really nice McLean's Music this year, her first foal for us. And then Wandwork also had a McLean's Music, which is her first foal. And we bought her because her brother Hedwig was with Godolphin, and Wasabi has since purchased him. We think he's got some potential, which will make her worth more down the road, and her foal's worth more. So
Yeah. So it's a fun five. We're pretty excited about the assets. Oops. Fund six. So what are the assets already in Fund six? So you might say, oh, you haven't even started fundraising. Well, we often it's opportunistic, so we have to do that. The other thing, and this is probably an important fact, no matter what, especially it's one of the rules I tell people. I'm always the largest single investor in any fund. So if you go through every single fund, one through five, I am the largest investor. So I am already an investor in Fund Six. I'm already put money in, and that money allowed us to buy these assets. So far we have four assets in Fund Six, all of which are broodmares, which makes perfect sense. Stallion assets tend to happen later in the year anyway, as you know, horses finish their racing career in the fall. They can happen earlier too, but generally speaking, they happen later in the year. Those four assets, one of which Fee, I do want to highlight just real quick. Fee. The other three are very similar to what George has talked about in the previous ones. They're young broodmares that we bought at auction. Fee actually was a racer for Wasabi Venture Stables, retired, and we have her in foal to Muth, and we're going to be selling her in the fall. So this will be a quick turnaround. We're flattening the J curve. We think she has a big active family, and we think we can get a very quick return from Fee. Um, so that's fun. What's in Fund Six at this point? Obviously, we'll be adding assets, mostly on the stallion side. I will say I am not expecting to add any broodmares to Fund Six. I can't promise that we won't, because we're opportunistic, and if things happen and the right assets falls in our lap. But the rest of Fund Six will be filled with stallion assets is the plan at this point. So, um, so Fund Six launches tomorrow. All of you can, and all of your friends can come and sign up at wasabistallions.com and participate in Fund Six if you are an accredited or qualified investor. I will now open it up. I'll stop sharing just so I can see everybody's face and make it easy. But I'm happy to answer any questions from anybody. Hopefully you found that enlightening. See if we get a question or two. Really nice crowd, by the way, tonight. Thank you all for coming. Um, we had a very large pre-sign up as well. So, all right, George, we may have crushed it here in we got no questions. That's pretty, that just, once again, we're bringing it. What types of stallions are you most interested in for Fund Six? Um, I mean, it's hard to say. I mean, I guess if you mean type, there really, in my mind, are only two types. There are existing stallions that we would buy on the secondary market, like an Army Mule or McLean's Music, if you think about those. Um, uh, or there are young stallions. And I would say probably equally both. It just depends on what's available. So it's kind of hard to say from that perspective. Amy followed up with a question about families that we're targeting. From a stallion standpoint, it's probably very similar to the stallions that we've targeted to this point. The Georgia, I don't know if you want to give any quick answer
Yeah,
to
no,
that.
I assumed that families. I assumed she was asking about brood. Well, no, you said we're not buying any more brood mares. Um, Stallions, we're less concerned families and more trying to make sure we find stallions that are going to be commercial. So ones that were successful racehorses, going to a handful of farms in Kentucky, which happen to be the ones that seem to make more commercial stallions. Um, TK, you mentioned proven stallions. I think an important thing about that, because we're interested in value and sort of finding things that appreciate, we're looking for a horse like Army Mule this year before these big crops at the races. McLean's Music had a similar thing when we bought that share. He had big crops at high fees coming through. There are a couple of other stallions. I actually got a call today. There's another Army Mule share out there. I don't know that we were going to double our position in him, but a couple of other stallions like that who got off to big starts with sort of lesser mares, and then have covered bigger, more impressive books, and those crops will be coming through to the races in the next year or two. It'd be nice to add one or two of those types of shares along with some freshmen coming straight off the track, because those are always the popular commercial ones that are priced to make our money on. And Neil, I think typically we only buy a single one in a stallion. Obviously, if the right stallion came along and we were sort of offered access, um, it's conceivable that we could buy multiple shares in the same stallion. Um, but but typically we're usually only offered one, um, and it would have to be a special case, I think, for us to sort of double down
Yeah.
like that,
We
and
we
go for
we
more than one.
just to be clear, we have doubled down from year to year or fund to fund, meaning we were able to get in one fund, and then the next year we liked it so much we added another one. We've had that a couple times. So uh Amy Kelly, does WB Stallions typically make more money from broodmares or the stallions in a fund? Kind of hard to answer, Amy. It doesn't really work that way. And I would say we'll check back in about 7 or 8 years and let you know. But it doesn't really come out that way. I will tell you, and once again, it depends on year to year and it depends on the market and all of those things. We try to have about the target goal that I shoot for is about 20% of the assets under management for a fund be broodmares and 80% be stallions. But some years it's got to go to other things just because opportunistic. So, um,
Uh, and Neil,
yeah,
that's why TK has limited the ceiling for the fund, because at a certain point, you're right there. If we raise too much money, there wouldn't be anything to spend it on, um, that would offer value to us, and that's why we've sort of picked that number as the ceiling. Under that number, I think we can do it between the private market, on existing stallions, and and the new ones coming off the track with the broodmares at auction.
mhm. Um, are the developments in California and Florida markets of any concern? Sure, Mark. I would say it's always a concern. It has less impact on our funds in at least my mental thinking about them, just because Kentucky's really not going anywhere. But of course, if California and Florida close up shop, I think it can impact the thoroughbred industry as a whole. But
We're not going to be
uh,
buying any shares in Stallions in California or Florida now.
yeah, I can tell you that that's 100% certain, for sure. But overall, it is a risk that for the industry as a whole that you must understand that there are markets, pieces of it contracting. There are also pieces of it expanding. So it's kind of, it depends on how you look at that. Um, Mark asked about Japan and EU. I won't talk specifically about other countries, but we have had a lot of discussion about other places. George and I have had many discussions about other geographical places. I don't know if that'll be in Fund 6, but there's a chance in future funds that they'll have a multinational flavor to them from an asset standpoint.
Probably not Japan though. That's very hard. The
Very
regulations
hard.
there, that just wouldn't be.
Yeah.
We wouldn't have access there.
Unless they change their laws, it's very hard to get access to any stallion or breeding assets there. Um, uh, Neo asked about how Force the Pass is doing. Uh, he was sold to Saudi Arabia. George, I don't know if you have a quick one-liner update at all.
Yeah, no, I check in and get updates periodically with the folks who bought him there, and he's doing well. They've been breeding a handful of mares to him a year,
It's a different
and
it's a different market than the US market, so it's a little the measurement is a little different.
much more breed to race
Yeah.
over there.
Um, Amy Kelly, so we may see Forever Young in the fund. Oh, well, I guess anything's possible. Yeah, yeah, who knows where that ends up and how that plays out. So, it's hard to say specifically which assets uh, yet. And I think it would be difficult for anyone to say, not just us, at this point. We're still early in the year. There was a question, it was asked to me privately. Do you provide asset level details to better understanding the underlying process? Yeah, actually, if you're in fund 1, 2, or 3, you've gotten those. We've offered those pretty just in January. I did asset level, how each asset performed. So, as far as audited financials, our funds aren't large enough, candidly, to go through a traditional audit. Um, I mean, we do prepare taxes and we do file with the SEC, and you can see all of that in Edgar. But from a true auditing standpoint, no, not like you would think of an auditing. Candidly, 30 years as being a venture capitalist, almost none of them are ever audited. But that's a probably very similar here. So, um, there's an upper limit for the total, but are you anticipating a date for closing the fund to investors? October 31st is the close. It's will be the close, or 2.5 million, whichever happens sooner. I can tell you, I would expect that we will be at $1 million probably in the first 30 days. So take that for whatever that's worth. So, but I would expect us to raise close to $1 million before we get out of the first 30 days. The interest level is pretty high this year. Our results have been pretty good, and the world knows it, which is good. Beats the alternative, I can tell you that. Any other questions that I can help with? Good questions too, by the way. I really enjoyed them. Once again, just to remind people, if you're on our mailing list, and I'm sure all of you are, what I would advise you to do is to make sure you've created your account on our portal at Wasabi Stallions. It's free to create, doesn't cost you anything. You can get it set up and be ready for tomorrow. It's a pretty simple process. and I'm going to do an email out to everybody, and the investing will start. If you're up at 12:01 Eastern time, the fund will open. So if you just can't wait, 12:01 Eastern time tonight, or early tomorrow morning, I guess officially, it will be open. So don't if you're really anxious, it'll be exciting to see who the first person is that invests, as a matter of fact. So, um, but well, thank you all for the time tonight. I'll post this recording on the portal. So if there was a piece that you want to review, the other thing that you'll notice in the portal, there's a chance for you to do a one-on-one call with me. If you have other personal questions that you want to ask, feel free to take a time and grab a slot on my schedule. I'm happy to talk about it in detail if you have the time. So thank you all for tonight, and enjoy.